Futures slightly positive as the Fed begins its two-day FOMC meeting. On the tape today will be consumer confidence and a double dose of housing data. All eyes will be on Apple's earnings after the close as the market struggles to regain some positive footing. I'm Brittany Umar and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. So markets closed negative yesterday after news out of Europe, but I'm wondering, Scott, if today we'll see the markets continue to be in sort of a wait-and-see mode ahead of the Fed.
I think we're getting a small bounce back only because we held that April 10th reactionary low. Yesterday we came in, the futures are down 14 to 17 handles. We weren't sure if we would be making new lows on the year or if we would bounce back, but we wound up holding that 1357 area. You know, we bounced off it, we grinded a little bit higher. Today the futures are up a little bit, but I still think that the market needs to prove itself before everyone starts putting more money to work as we build what could be another very negative pattern here.
Now, will the downside continue? Do you think there's more to come?
Well, let's take a look at the chart of the S&P because everyone's throwing everything out there. I'll just throw out the levels. So if you look here at the chart, we talk about trends. You know, this is the macro trend that's been intact all the way since that October 4th low. We held it right here, okay, coming into that April 10th. And look at that number, very important. 1357 was right there. We then rebounced back to retest this trend line that was broken. Okay, we look at trend lines that break, and right here is that intermediate momentum trend line that I follow, which got me out of most of my positions. This was also when IBD put us in a correction. So we went down to 1357, we bounced back to work off that oversold condition. We broke this little pattern here with this is ascending channel. You know, so a bounce back to this area, you know, I would draw a line right here. If the bears have control and if they want this head and shoulders top pattern to trigger, they'll probably keep us below 1375 to 1377, and that will be a spot to reshort, because if that's the spot to reshort, all of a sudden you look here, you have your left shoulder, you have your head, you have your right shoulder, and then this is your neckline. And if you look at the measured move from the head to the neckline, all of a sudden you're getting a deeper correction down to 1320 to 1340. And before we quickly get off the chart of the S&P, I just want to show you the weekly chart. On the weekly chart, you know, you see somewhat of a perch here. You know, this is a pretty big perch after a huge move. You know, look where we are right here with this little topping pattern. So this support here is very big, and if that does not hold, then I do think, you know, this area will come into play, but obviously it's going to have to deal with that 1357 first. So the next few days I think will be very important.
Okay, and as investors make sense of all of this, I think some might be wondering if smart money should be on the sidelines here.
Well, I think that you have to have money in the market with a plan. You know, if you're a macro investor, you definitely could have your go-to stocks that have made historic highs that could, you know, weather any correction. But, you know, there's no reason to be in a more than a tier one. We're in one of those phases where we're in a correction mode. I don't think we're going to go 22% off the highs, but we've only been about 5% off the highs. So if we can go 7 to 9, you just have to make sure that you're committed and that you know your risk. For me, I'm a momentum trader. I play intermediate trends. I have not built a portfolio back up like we had in December. I'm going to trade for cash flow, go long and short. I'm going to let the market give me some more data.
Well, high beta tech stocks have been under pressure as of lately. I think many are wondering if they could lead us higher or if they'll in fact lead us lower.
Well, you know, in the beginning of the correction, the leaders held up. They kind of like lulled everyone to sleep where the market was correcting and everyone's like, oh, look at the leaders. They're acting well. And then all of a sudden they played catch up like that. Starting with Apple, that showed a relative weakness divergence almost about 2 weeks ago. If you remember the snapback in the markets, you know, Apple actually went lower, which was for the first time it didn't lead the market, it lagged the market, so it gave you some clues to get out of the way, and now it's about 10% off the highs. If you take a quick look at the chart, here is that little perch. Here is a bit of an outside day. Here's when it was struggling with 622. You had 2 days when the market bounced, which I've shown you, it went lower, and then we wound up breaking this accelerated uptrend, came all the way down to the 50-day moving average, and now we kind of held it yesterday. There's been some nice trades along the way. We had that bounce right back to retest and then quickly took us lower. At this point, you know, if you're a macro investor in Apple, you know, you've been probably holding it for a long time, what I would do is just this. Sell some calls, buy some puts just in case, or just sell some covered calls, or just make sure that if it does go down another 30, 40 points with earnings, you're okay, because you can. doesn't have to go up 30, 40 points. And as a trader, I'm going to probably just take some kind of option strategy if the premiums aren't crazy, and I'll go over that around 3:30 today.
That's great, because I think everybody's looking for a game plan for Apple ahead of their earnings tonight. But let's talk Netflix. Of course, we're reporting earnings on Monday night, hitting estimates, and yet shares tanking on growth worries. So what is your game plan with Netflix going into today?
What's interesting about Netflix is in the beginning of the year, it was our focus. We were enamored with it. Stock got crushed from 300 down to the 70s. It had a really nice tight pattern and then finally ignited. And I think I spoke Netflix every single day from about 77 all the way up to about 130 because it acted very well. If you look at the pattern here, you will see that you remember this downtrend. It was getting tight, tight, tight. This is when it broke out. I think this is when I was on Bloomberg saying it can go to about 110. PS, it went to about 130. And look at this reversal strategy right there. We've talked about it off the charts. That was your short-term sell signal, for traders where you had an outside day. Made a high, came back below it, and then since then it's been somewhat trending lower. And really in this whole mess, I haven't even talked about it because the action hasn't warranted. But now today, I'll look at it just for cash flow. If you look where we are right here as far as the chart's concerned, you have some really big support around 91, and then where it broke out from the last time was right around this what is this? This high here is about 87. So 87 is where it's at right now. So at this point, I wouldn't be pressing Netflix to the downside. It's just too dangerous. The same way you can't just buy it and say, oh, it's got to bounce. Wait for a low to be established, buy it versus that low, and if it keeps flagging higher, stay with it. I think it could take back some of this downside gap, but you got to make sure that you see the composure, and I will be focusing on this, so tune into my radio this morning.
And Baidu also reports earnings tonight. Recent talk that Baidu will be the default search engine in the Apple iPhone has many thinking that Baidu's guidance for the next quarter could be strong. What do you think about Baidu playing it now?
I think that being in any of these leaders, you need to know your commitment. You need to know if you just got involved in Baidu and all of a sudden you're at risk, or if you've been in Baidu for 3-4 years, it's at like 100. It's actually like at 1,400. So you have a lot of gains, which I do think you need to protect some. As a short-term trade, recently it's held up. It's been very strong. If you remember the pattern, we were buying it above 140. If you look here at Baidu, you will see that was right around this point when it broke through this downtrend. Then you had this small short-term, top right there where it pushed through and failed. And then it was holding up. And unfortunately, yesterday, guys that had stops probably did not get out of it because you look at this little ascending channel to the upside. I was saying have stops in right around here, around 142, 144, and it opened below it and sliced through it, but it held a 50-day. So for me, again, my golden rule is I'm not taking stocks into earnings. I'll either trade them afterwards or I'll do an option play. For this one, I just think with Google weakness and some of the problems out of China, I think it's a bit risky. So, just know your risk if you're going to be long the stock. And if you want to do an option play, just make sure that the premiums aren't too nuts and you go over it right. Maybe look to Jill from Options Profits for that.
Speaking of playing stocks ahead of earnings, Amazon has remained weak, but many analysts are positive about Amazon as it gets ready to report its first quarter earnings on Thursday night. So what do you think about Amazon?
Amazon, I think the macro pattern is still bearish. This stock did not participate in the tail end of the rally. Yes, there were a few trades and we had some cash flow moves, but overall, I think the macro pattern is still weak. So this one, I will look to. If I was, for Baidu, if I was playing options, I probably would go with a bullish option. For Amazon, if I wind up doing it, I'm going to go with some puts because I think it's vulnerable. So if you look here at the chart of Amazon, you will see here's this minor uptrend that it's been tracking and holding on to, in the course of the past, few months. If you go to the weekly chart, I think you can see a clear picture here. Here it is, okay? Look where the highs are. It was well off the highs, well before the market. Another short-term top. I would say, below this, what's this low here? This low is what, 175? So 175 to 180, it gets below there. It's very vulnerable for a move down to about 120, 140. In the beginning of the year, I was talking about how if out of all high beta tech, this is one that could have some trouble here. I do think that it's still the case. And, as we have a little less premium going towards the end of the week, I most likely will take a put scenario here just to be involved because I'm not going to short it. There's too much risk being short into the earnings. But if you want to play for downside with less risk, you'll have your premium paid. And again, 3:30 earnings time, that's when I start talking about it on my radio based on the action of the day.
Okay, and just really quickly, we did get a bounce out of Google yesterday. Could we use this as a bellwether for the rest of the high betas?
I don't think we could use this as a bellwether. This stock was my 2011 stock of the year going into it technically. technically recently, because of the 2 quarters they missed, it's been a little bit weaker. If you look at the pattern real quickly here, you will see last time, it reported and came into the 200-day, it held it, and it was much more than a trade. It wound up coming all the way back up almost to the highs. Here, if you look at this trend line, it broke it, okay, after earnings. Look at this harsh down day after earnings, another harsh day. It held just like last time, held the 200-day. So guys yesterday in the down open actually traded it for cash flow, but I'm not so set, or I don't have the same conviction I had last time that it would come back, because I think people are starting to get disappointed here. I would say the bounce can continue to like 603 to 608, but right around there, if it can't get back above there, it could turn lower. And if you did buy it versus this 200-day moving average, make sure that the 590 area is your stop, because sometimes things can change.
All right, well, financials showed relative small strength in yesterday's down move. We're going to dive into this sector coming up right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Now, we did see financials show relative strength yesterday in yesterday's down move. I think the question now is, can these stocks go higher now that earnings are out of the way for them?
Well, they were sold on the earnings, so if you didn't take them into the earnings, or you sold them after the report because there was opportunities to sell JP Morgan when it was up, or Bank of America when it was up, or Goldman, I think there are buyable areas. Yesterday, as you saw, that the market was on the lows, and some of these financials started to perk up. If you look at the chart of the XLF first, you will see that this was longer-term support. Here is your upper wedge that got resolved to the downside. Small little bounce back. If you look at the bounce back, what did it do? It retested, just like the S&P, this broken little trend line. And then yesterday, it held a very important support. This low here was what, 1495? That's what it held. So from here, I think it continued to bounce to fill this gap up to about 15.25. But then if it stalls at 15.25, you could see some profit taking. I'm looking just for a quick bounce here. I did focus on 1 or 2 of them yesterday as just vehicles for cash flow, since I wasn't caught in them.
Speaking of those 1 or 2, I know you picked up some JP Morgan yesterday. That stock was sort of looking for direction yesterday, but what made you buy it, and what now today?
Well, JP Morgan kind of led them lower, and it's the best in breed, in my opinion, in the banks. And yesterday, I'd say right around 10:15, 10:20, I talked about this in the recap. The futures are making new lows, and JP Morgan was like 30 cents off the lows. So I pointed out, I'm like, there's a positive divergence. I'm going to buy some. Then the futures bounced, and it played by the rules and went positive. So to me, that showed leadership, and that told me that I could be long it for maybe a day to 3 days, or even longer if the market changes a little bit. So if you look here at JP Morgan, you will see JP Morgan, this was that small ascending little trend line that was broken right around there. Remember when it started getting through the 10-day, I tweeted, this could be it for now, or it takes them off the table. Then you had on earnings, it was up and they sold it. Then it stayed in the bottom, half of this range. So, yesterday's down open wasn't unexpected, but buying it right here at the 50-day made sense. I do think that, in today's up small open, I probably will sell the majority, somewhere around 43.30, and then at some particular point on a more macro level, if this downtrend, starts to come in and we see more of a macro wedge, because that's probably what's going to build here. If it finally continues and starts breaking to the upside and holds above it, I think that's when it'll be the time to be in more of a swing / macro long versus cash flow long. All
right, and Goldman showing signs of life yesterday. Is the downside over for this stock?
This stock I'm very excited with, not because I made money, but it told me on Thursday when it broke 114.50 that we have more weakness in the markets coming. I didn't play this yesterday, some of my traders did. If you want to look at Goldman Sachs, I would say, you did have a pause here near the moving average. This one actually went all the way down to the 200-day. So if you saw JP Morgan held the 50, this held the 200. So this is showing you weakness. Maybe it gets a snapback from here to test this 14 and change. So if you did get long yesterday because of the green bar after a mess, I would say the quick, easy bounce could take you back to 114 and change. But after that, the market's going to need to prove itself. Same thing here. You'll see a downtrend develop, and then if it could build some support going sideways, maybe, in the next few weeks, there'll be a buyable pattern to break it. For right now, I just think it's a trade back to about 114.50 if it can get there.
Now, despite beating earnings, investors are treating Bank of America as a definite representative of the weak camp in the financials. So is there any way to cash in here?
The way to cash in was at morning call. It was at 9:40. It was up 40 cents. We were like, they just sold off JP Morgan. They sold off Goldman Sachs. Do not chase it here at 9:40. So if you didn't chase it and you salvaged your trade down by $8, or $8.15, maybe you could buy some back. So if you look here at the chart, you will see, remember that pattern that was really exciting? That we traded through 8.15, 8.25. It was right here. Then it beelined all the way to almost 10. And then you had a line in the sand to trade against, which was right here, which was around 9.40. Came all the way back in, built a somewhat of an ascending channel like the rest of the market. And now it broke lower. I'd say for this one too, you want to have the easy bounce or the harder bounce. This could go back to like 850, 870, but at that particular point, there's going to be a lot of resistance right around here. So we're going to need a much more positive market to get more than just a trade back for cash flow, as this too will develop some type of larger wedge/pennant. But now at least we have a point of reference. Yesterday's low. Here's your easy bounce, and then we'll figure out if it can hold higher and then make another move.
Okay, Bank of America did lead stocks lower yesterday, but so did Morgan Stanley, ended up being one of the biggest decliners of the day. So is this one to avoid for now, or possible short?
I think people have been trying to buy Morgan throughout the course of the rally, and it's disappointed you each and every way. It's been the weaker one. I wouldn't be involved in it. There's really no need. It's below all the moving averages. I'm not even going to show you the chart.
All right. Well, let's do some quick hits really quickly. Metals have been in an intermediate correction. We're wondering now if the Fed comments could make them break out.
Well, I think that they've been trapped. In the longer term thesis of gold, it's still in a macro uptrend, but it's coming into a little bit of jeopardy on a smaller level, which I follow more intermediate ever since that Fed report from, I think, 2 months ago when you had that huge down move. That's controlled the trade. So we need to see if a new news release could change that up. So if you look here at the chart, you will see that, remember on that day, this was, I think, what date was that? That was March 29th, or actually, sorry, February 29th. Huge down day engulfed this entire, time period. And then since then, all you have is high, lower, high, lower, high, lower, high the whole way. For me, I feel like I've bought it here and lost, bought it here and lost. So, I'm not that happy with this situation. But anyway, it's not up to me to be happy. Here you are, I would say above 162, 163, perhaps you could see a new change in direction. At least you have your point of reference right here, which is the low of 156. So, I would watch the action. I wouldn't anticipate it. If you're a long-term gold bug, and you sold it into what was an outside day way back when up here, perhaps take a little bit. But again, no need to be in such a bigger position, because if you look at the weekly chart's saying, we could be in a little bit of jeopardy as, I can't even really draw it, but we're coming into, some serious support here. So be careful.
And SLV heading lower for now as well?
It's really the tag that wags the doll. Every now and then, the dog, every now and then it does take more of a leadership role if it's more battered and bruised. SLV, very, very similar. If you look here, this is, the weekly. I'll go back to the daily. Really, it's below all the moving averages. It's not anything to be so enamored with. You have that same kind of downtrend here. It's really going to have to get above like 31 and stay over it, with a lot of volume, which we haven't seen yet here on silver. And
Las Vegas Sands picking up off its lows yesterday, enough to make you interested?
Yeah, I looked at it yesterday. I actually didn't trade it. I was too focused on Apple and some of the other guys. It too, like everything else, corrected. It did hold the 50-day moving average. Earnings will be out this week. Make sure you know your time frame. It was a great trade at 48, at 50, at 54. And then, along the way you take profits. And at this particular point, if you sold into strength, buy around the 50-day, but just know if you're going to hold it for earnings. For me, I'm probably not going to. I'll trade it after.
And lots of believers in Lulu right now, still going higher?
Well, Lulu also came in, okay, but it didn't really break down. It's still showing leadership. You look here at Lulu, you will see that you do have a defined support area. I don't love this pattern, to be honest, because it's like a rounding top type pattern. But it's still above the 50-day. It's still showing some relative strength. I still love their clothing and people who wear it. But anyway, here's a potent down day. It kind of reflects back up, and now it's holding. So I would say if you're going to be long versus 71. If this breaks 71, you could have a move down to 66. So just take a little bit of caution right here with Lulu.
All right, and finally, how is Boeing shaping up ahead of the earnings before the open on Wednesday?
Well, I think they just got a news release that they got a big order, and I think it responded positively for me. I haven't had much success trading Boeing. It's still in this choppy, sloppy range, which at some time it will get resolved, maybe when the market gets more positive again. It's above the 200-day. It's hanging out between 70 and 75. I'm not going to be involved in it. I think at some point this year it starts getting above 75, 50, 76. I could see some type of upside. I know fundamental people love it moving forward. So if you're a fundamental person, be in some, just in case the earnings are that good and you don't miss it.
All right, well, of course, everyone will be watching Apple today after the close. So for the rest of the day, where's your focus?
My focus is just going to be is how far could this bounce continue? Will it be, feeble and lethargic with no volume and make it very easy to reshort? I think in my mind, I'm looking to reshort the spiders like 137.40 to 137.70. So you have some room. I'm going to play the bounce for acute cash flow, but I'm not going to be stubborn. If all of a sudden, I don't know, things start acting better and which I don't really believe that they will in the short term, maybe I'll put on a portfolio approach, but market has a lot for me to prove. I'm going to be taking trades both long and short, and there's a lot of opportunity right now. Just know your time horizon and know your risk tolerance.
All right, thanks so much, Scott. Have a great day, everyone. Happy trading.